You've probably heard about the Pi network. It's been making waves in the crypto space, capturing the attention of millions worldwide. Maybe you heard about it from a friend, saw it buzzing on social media, or stumbled upon it while browsing online. The project has definitely made its presence known. The pitch is simple, almost deceptively so. Mine cryptocurrency right from the convenience of your phone. Imagine earning digital currency without needing to invest in expensive equipment. No need for expensive hardware, complicated setups, or burning through massive amounts of electricity. Forget about those noisy, power-hungry mining rigs. Just download the app from your app store, tap a button once a day. It takes just a few seconds. And just like that, you're rewarded with Pi coins, seemingly effortlessly accumulating digital wealth. It feels like free money falling into your lap, a digital windfall just for participating. And that's a powerful hook. A compelling proposition that's drawn in millions of users. The allure of easy money is hard to resist. Started by Stanford grads, lending it an air of legitimacy and academic rigor. Pi Network aims to democratize cryptocurrency to make it accessible and user-friendly for everyone, regardless of their technical expertise or financial resources. But here's the twist, the part where things get a little more complicated. This isn't mining in the traditional sense, not like Bitcoin or other established cryptocurrencies. Bitcoin uses proof of work, a system that requires solving complex mathematical problems. This process is incredibly energy-intensive, demanding huge amounts of electricity and powerful computing resources. Pi, on the other hand, uses the Stellar Consensus Protocol, a different approach to validating transactions. There's no heavy lifting involved, no complex calculations, just a simple daily check-in to prove you're a real person and actively participating in the network. Instead of solving cryptographic puzzles, you're building a trusted social graph, connecting with other users and vouching for their authenticity. This unique approach has fueled Pi's explosive popularity, attracting a massive user base in a relatively short amount of time. The network boasts tens of millions of users worldwide, spanning across different countries and cultures. The more people you invite to join the network, the more Pi you earn, creating a powerful incentive for viral growth and expansion. It's a brilliant marketing move, leveraging the power of social networks and word of mouth to rapidly expand its user base, creating a massive community of individuals, all hoping their Pi coins will eventually be worth something substantial, driving engagement and participation. But here's the catch, the crucial detail that often gets overlooked. Everything happens inside a closed system, a walled garden controlled by the Pi network. The Pi you mine isn't actually on a public, decentralized blockchain yet, which is a fundamental characteristic of most cryptocurrencies. As it stands, you can't send your Pi to an external wallet, trade it on major cryptocurrency exchanges, or use it to purchase goods and services outside of the Pi network ecosystem. It only exists within the confines of the Pi app, a digital representation of value within a closed environment. It's like casino chips you can't cash out at another casino, or even at the cashier. You can show them off to your friends, accumulate them, and feel like you're building wealth, but you can't actually take them to the bank and convert them into real-world currency. The entire value proposition hinges on a future promise, a potential future where Pi becomes a fully functional and tradable cryptocurrency. That one day, Pi will transition to a public blockchain, open up to the wider cryptocurrency market, and allow users to freely exchange their Pi coins. Until then, it's all speculation, a bet on the future success and adoption of the Pi network. The system is strategically designed to prioritize user growth and network expansion first, with the focus on utility and real-world value coming later. For now, Pi remains a closed ecosystem, operating independently from the broader cryptocurrency landscape. Consequently, it has no real-world liquidity, meaning you can't easily convert your Pi into other assets or currencies. The hype surrounding Pi is undeniable, but so is the inherent uncertainty surrounding its future prospects. Everyone's eagerly waiting for the day when Pi transitions to a fully functional cryptocurrency, a true digital asset that can be traded and used in the real world. Until that day arrives, your Pi is essentially just a number on a screen, a digital placeholder with uncertain value. The big question that looms over the Pi network, will that number ever translate into tangible value outside the confines of the app, or will it remain just a digital curiosity? That's the gamble that every Pi user is implicitly making, a bet on the future potential of the network, and the clock is ticking, as the Pi Network community eagerly awaits the next phase of its development and the realization of its ambitious vision. Let's talk about the dream that many Pi Network users share: Pi reaching $10 per coin. This is the number that many pioneers have in their minds as they mine Pi on their phones. For many, that would be life-changing. It could mean paying off debts, buying a home, or securing their financial future. The possibilities are endless. But is it realistic? Let's do the math and explore the factors that would need to align for Pi to reach this ambitious price point. We need to look at supply, demand, and the overall crypto market. If 30 billion Pi are in users' hands, which is a commonly cited estimate at $10 each, that's a $300 billion market cap. This is a significant valuation that would place Pi among the top cryptocurrencies. That would make Pi the third largest crypto, surpassing many established projects in the crypto space. Behind only Bitcoin and Ethereum, the two giants of the cryptocurrency world. For this to happen, Pi needs a public, decentralized mainnet, a fully functional blockchain that is open to everyone, and listings on major exchanges, making it accessible to a wider range of investors and traders. Without liquidity, meaning sufficient trading volume, there's no real price discovery or stability. Most importantly, there must be real demand for Pi, genuine interest and usage of the coin, not just people wanting to sell their mined Pi as quickly as possible. Pi needs a thriving ecosystem, a network of applications and services that give Pi real-world value. Of apps and services, using its coin for transactions, payments, and other utilities. Without a killer use case, a compelling reason for people to use Pi, the price is pure speculation, driven by hype rather than fundamentals. If early adopters rush to sell their Pi holdings driven by a lack of confidence or immediate need, the price could crash instantly, leaving many disappointed. The dream is big, the potential is there, but the hurdles are even bigger, requiring significant development and adoption. Until Pi proves its utility and establishes a strong ecosystem, $10 per coin is just wishful thinking, a goal that remains distant and uncertain. Pi Network launched in 2019, but here we are years later, still no open mainnet. Compare that to Solana or Avalanche, which launched and built ecosystems in just a couple of years. Pi focused on building a huge community first, not a working product. That's both its strength and its biggest criticism. The long wait has bred skepticism. 6 years is an eternity in crypto. The team says they're prioritizing security and compliance, especially with KYC for millions. But the crypto world moves fast and Pi risks being left behind. By the time it launches, the tech could feel outdated and the hype could fade. Is this a smart, careful strategy, or a sign of trouble? The world isn't waiting for Pi to catch up, the race is on and Pi is still at the starting line. Most professional analysts don't cover Pi, it's not tradable, so there's no real data. Price predictions online are mostly speculation, often from Pi fans or influencers. Some say $1, some say $10, but it's all based on hope, not hard numbers. Critics point to delays, centralization, and lack of utility as red flags. The core team controls everything, unlike decentralized projects like Bitcoin. Until Pi launches a real mainnet and gets listed, analysts are just watching from the sidelines. For now, Pi's value is all potential, no proof. So, can you actually use Pi? Sort of. There's a live mainnet, but it's in an enclosed network phase, a private beta. Verified users can send Pi to each other and use it in a few early apps or marketplaces. But you can't move Pi to external wallets or exchanges. The value is based on private deals, not a real market price. It's a sandbox, not an open economy. The big event everyone's waiting for is the open network launch. Only then will Pi be a true cryptocurrency, tradable on exchanges. Until that happens, Pi is just a promise. You can't cash out, and its real-world value is zero. Everything depends on the network finally opening up. Until then, Pi is an IOU, not a currency. The future is uncertain, and the wait continues. While Pi keeps people waiting, analysts are buzzing about Remitix, RMTX. Remitix targets a real problem: expensive, slow international money transfers. Using blockchain, it makes remittances fast and cheap, up to 90% less than banks. RMTX is already live, with real partnerships and a working product. It's integrated with payment processors in major remittance corridors. Analysts like that, they can measure real transaction volume and business progress. The RMTX token is used for every transfer, creating organic demand. As usage grows, so should token value. Remitix is about solving real problems, not just building hype. That's why serious investors are paying attention. Investing is about balancing risk and reward. With Pi, the reward could be huge if the coin ever launches and holds value, but the risk is total. Your coins could end up worthless or the price could crash from mass selling. Remitix offers a different bet: growth tied to a real business solving real problems. If it captures even a slice of the remittance market, demand for RMTX could soar. The risks are business and market risks, not all or nothing project risk. Pi is a lottery ticket. Remitix is a business investment. One is a gamble on a future promise, the other is a bet on current performance. Know which risk you're taking and invest accordingly. Let's consider an analogy to help illustrate the difference between these projects. Pi Network, in this scenario, is like a grand, luxurious restaurant that has been under construction for years. The building is impressive, the plans are ambitious, and the potential is enormous. To generate excitement and anticipation, they've been giving out free meal vouchers to millions of people, promising a fantastic dining experience once the doors finally open. The hype surrounding this restaurant is absolutely huge. Fueled by clever marketing and a strong social media presence, everyone is talking about it, but here's the catch: the doors are still firmly closed, and no one really knows what the food will actually taste like. There are questions about the quality of ingredients, the skill of the chefs, and, most importantly, whether the kitchen can even handle the massive crowd that's expected. When it finally opens, there's a significant risk that everyone might rush in all at once, completely overwhelming the system and leading to chaos and disappointment. The perceived value is almost entirely based on the promise of what it be, not on any tangible reality or proven performance. It's all theoretical at this stage. On the other hand, Remitix is like a food truck. Smaller in scale, but it's already out there, actively serving real customers and generating real transactions. It addresses a specific, identifiable problem, generates revenue on a daily basis, and demonstrates a clear cash flow. And crucially, its plans for future growth are directly tied to its actual performance and demonstrable metrics. It's a measured, sustainable approach to scaling the business. You can see the food truck in action right now, taste the food for yourself, and form your own judgment based on your direct experience. The risks are undoubtedly real, as with any business venture, but so is the underlying business itself. It's tangible and verifiable. With Pi Network, you're essentially placing a bet on a blueprint, on a future vision. With Remitix, you're investing in a working kitchen, in an operational business that's already serving customers. One represents hope and potential, the other offers concrete proof of concept and current function.